Hi, my name is Michelle Bornstein, and I have been consulting with ConnectWise clients for the past 9 years. I've been working in the technology industry for 17. Today's topic is a pain point that many of my clients struggle to manage. So as we go through this presentation, some questions to think about would be, how many times have you paid for services, but your client has canceled their agreement with you? When vendors send you a bill, do you know what they are charging you per client? And does the person who's paying the bill audit or reconcile to make sure you're paying the correct amount? My goal for this presentation is to help you manage some of these issues. Today's agenda is going to cover 3 areas: system setup and configuration, cost management process flows, and then financial analytics. When we're working with the system setup and ConnectWise, there are many areas that can impact what's happening from both a profit standpoint as well as a GL income account P&L standpoint. Our GL chart of accounts, agreement type options, product category and subcategory, and then the general ledger integration are all going to be playing a role in how your P&L will look at the end of the day. And then your agreement addition configuration and invoice templates will impact how ConnectWise is presenting information both internally and to the clients. From a high-level GL chart of accounts, you may have a managed service income account and then multiple sub-accounts under that main account. I have a sample here where we're showing the managed service income as well as the cost of goods sold. ConnectWise will not be transferring cost of goods sold, but it will have a mirror effect. So you want to be detailed to the point that it makes sense for your business and then understand the impact that those two accounts will have on each other. So to start any of this, you would need to evaluate your existing chart of accounts, create any additional accounts and sub-accounts if necessary, and the corresponding cost of goods accounts. From an agreement type option, typically ConnectWise will recommend that we have multiple agreements set up, multiple agreement types per client, which allows you to track the revenue on the main agreement tab. The GL mapping is based on the agreement type, and then you would be maintaining multiple agreements for one client. Alternately, if you choose to have a single agreement type, your revenue and cost will typically be tracked on the Additions tab. The GL mapping would be based on the products, and then you would maintain a single agreement for each client. When working with the product category and subcategory, these will be directly related to the Agreement Additions tab. Your products will correspond to a vendor service. So in this example, I'm showing Google Apps Email Vault. When I look at a Google bill, I'm going to see that specific service. I have a category and subcategory mapped, managed service on the high-level main account. The sub-account would be web and email service. And then I'm also recording a unit cost and a vendor for reporting purposes. The cost will transfer over to the agreement addition. It will be used for reporting purposes as well as to assist with any markups if you're going to be billing directly from that addition tab. From a general ledger integration standpoint, if you're choosing to have multiple agreement types, your high-level account type will be revenue agreements. You'll map off the agreement type itself. Alternately, if you're choosing to have a single agreement type, your high-level account mapping is based on the revenue agreements products, and then you would be mapping off the product category, subcategory, or an individual item. Your QuickBooks income account and sub-account will need to be added to the account section so that the mapping will transfer between ConnectWise into QuickBooks to your P&L. If we go with an agreement addition of a single GL income account, so you have managed services as your main account, that's where all of your revenue will be reporting. Using the multiple agreement types, you would go to your agreement tab, go to the recurring invoicing parameters section, and enter a billing amount. This is going to be the revenue amount, the amount the client is agreeing to pay you for services. On the Additions tab, I'm suggesting that you actually add the individual items, the product total quantity itself, the unit price would be 0, and you would record an actual unit cost. What this allows you to do is get accurate profitability reporting based on the services that you're providing. Option 2 would be to maintain multiple GL income accounts and use a single agreement type in ConnectWise. So we would have managed services and then a sub-account under that particular income account that we would want to impact. In order to achieve that, the agreement tab itself will have recurring invoicing parameters section billing amount at 0. The additions tab will hold the unique item service that you're providing, the total quantity, the actual unit price, and the unit cost. We want the billing to come from this addition section and be broken apart by all the services that you may be providing for your client. In order to make either of these options work, the invoice template is going to play a role. So today, when you turn on ConnectWise, you will have an agreement invoice showing a list of detailed services. So anything that's on the agreement will print out on the invoice itself. If you choose to have the main billing come from the agreement tab header and the additions just recording cost, you may want to consider not showing all of those details to the client if that's something that you do not want to display and you just want a subtotal. And you have the ability to override the standard invoice template under System, Setup Tables, Invoicing Templates. You can go to the body section for charges and show display subtotal only as the only item checked. What that will do is collapse up all of the detailed services that you're providing for your client, roll them back up into a total revenue number. The invoice will reflect a very basic subtotal amount, and when it transfers over to QuickBooks, it will be in detail, so you will still be able to impact any revenue breaks there. So just as a recap, we have just very quickly touched on some of the base configs that are in the system today that will be impacting how you manage your service cost. So determining your GL chart of account structure is going to be key to making your income account mapping and your P&L produce the right information. You want to determine how your agreement type should be set up. So do you want to have multiples or do you want one single agreement per client? You need to create detailed products to match your vendor services. So not just a high-level managed service workstation, but actually some details that support that if you're needing to procure services from third-party vendors. Creating categories and subcategories to be associated with those products and having them mirror what your income account structure looks like today is going to be important. And then setting up your GL mappings to map to the right income account. So going into the general ledger setup table and actually developing out that mapping structure based on the agreement types or the category-subcategory combo. Configuring your agreement additions to have detailed tracking. This will be leveraged in lab tech integrations as well, or some third-party integrations, so that agreement additions tab should be detailed with vendor-specific services, and then you're deciding if you actually want to bill off of that additions tab or if you want to bill off the main header. And then based on your configuration, determining if your invoice template needs to be adjusted. So moving on to the process, how do we manage these costs in the system? So very high level, obtaining a vendor bill detail so that you know exactly what it is that you're paying the vendor for. Comparing those vendor bills to what you have in the system today from an agreement standpoint, as well as the detailed products on the additions tab. Making any updates, so quantity counts, cost changes, anything that needs to be updated will need to be adjusted. And then two sort of separate areas would be tracking engineering costs, so actually having a burden cost associated with engineer hours, and then managing any third-party costs that may be coming in. So when I'm suggesting to obtain the bill details, that means going and getting a detailed bill from your provider, identify who the client is, the services that you're providing, and then compare that to the current agreement that you have in place and update the additions if necessary. What this will allow you to do is pull out information specific to client, service provided, cost, gross profit, and any profit margin reporting. So in this sample, I have an actual custom report writer report that's detailing out all of the agreement additions that we are associating with the Google service provider. So in this case, I have 3 agreements that are obtaining Google Apps email vaults, the total quantity, how much we're charging the client, what our cost is, so how are we paying, what are we paying to the vendor, and then the gross margin. Google Apps for Business is a separate service that we're providing. We are being billed by Google, but we want to separate that out, so we have details. So if account changes in the Google Apps for Business, it's not an overall adjustment being made to the agreement. It's just going to be that one product count gets changed, and then therefore your profit margin is going to go up or down based on that. When you're updating the addition quantities, you want to adjust the agreement addition quantity to match the vendor bill and verify if the cost is accurate. There are ways to pull a high-level cost from a specific product item, not necessarily each individual agreement. So if you have a large number of agreements out there and this detailed level is going to impact efficiencies, then the report writer can pull information from different tables to determine that. However, if you're looking at the overall standard profit reporting for agreements, having the cost on the actual additions tab will be critical, and having it be as accurate as possible will be critical. When we touched on engineering costs, this is just going into the setup tables, the member configuration, going into the billable section, and associating a billable forecast, so the percent of time that you expect the engineer to be billable, what's their daily capacity, how many hours can they actually work, and then associating an hourly burden cost for profit reporting. There is a burden cost calculator that ConnectWise provides, but you can also obtain calculations from anyone that's advising you. But putting in a cost here is going to be critical to get accurate profit reporting from the system, because this will be tied to the hours that the engineer is actually working for you. From a third-party cost standpoint, this is just an example of a contractor, subcontractor being used to provide services. This could be any third-party cost, any additional cost, but the product item is going to be the carrier of the information. So in this case, I've gone to products, I've added a third-party service product item. The category, subcategory is mapping to service labor, but you can put that to any account that makes sense in your financial structure. We want to obtain the contractor bill, so we want to know how much we actually have to pay, and then we want to add that third-party product to a ticket so that we can reflect that cost for the client and agreement if it's applicable. In this example, the quantity would be the hours that the engineers worked, and then the price and cost, we're charging the client $150. We're paying that subcontractor $100, so we want to reflect both numbers here on the actual charge so that it will impact the financials accurately as well as any profit reporting. So to recap the management process of costs in the system, we want to reconcile vendor bills to the agreements that are in place today. So obtaining that detailed bill will give us the information that we need to make sure we're recording the right quantities and costs in the system. Make any updates or changes to the quantity and costs monthly. If there's not a huge change, so maybe only quantity 1 at 50 cents has actually changed on the agreement, it may not be worth your time to deep dive into each agreement each time billing goes out. It might be only if you have a massive change. But what we want you to be looking at here is, did a client onboard or offboard? So is there a substantial change with someone coming on or off? That vendor bill is going to show you that information, and if you're comparing that to the clients and their agreements, you'll immediately know that billing either needs to start or billing needs to stop. Associating an hourly cost to engineers and then having them enter their time on tickets is going to be critical for profit reporting, and then recording any additional costs in the system. So many of my clients will go straight to QuickBooks, process it, pay the vendor, and be done with that. but they're really not reflecting anything in the ConnectWise environment. So I try to encourage them to put the information into ConnectWise so that when you are pulling a report, it will be as accurate as possible. From a financial analytics standpoint, I'm going to show you a handful of reports that are available to you. Some of them are custom, some of them are standard. So we'll be touching on the agreement gross profit report that comes from ConnectWise today, some trend reporting, some custom dashboards, as well as the standard dashboards so that you can get a feel for what some capabilities are in the system today. The standard agreement gross profit report under finance reports will show you each client, the agreement based on types, the agreement type, the gross profit margin, and what you're invoicing today, as well as any time spent or hours spent that are going to impact profitability. It should reflect all of this on your standard agreement gross profit report. If you have multiple agreements for a specific client, you will see clients repeating here. So keep that in mind, that based on how you structure your agreements in the system will determine how this report outputs information. Trend reports, these are two very basic report writer reports that I've put in as an example. Many of my clients will ask for a trend so they can see month to month what's happening from a revenue standpoint as well as a profit standpoint. When it's trending, what you would be looking for here is any gaps in billing. So maybe you have revenue trending for 3 months, then there's a gap, then it picks back up. What you want to do is make sure you go back and get that revenue that's missing for the month that for whatever reason did not get billed. Same thing with profit. You want to be looking for any gaps as well as negative profit, meaning maybe there was no ticket work or no cost associated at month 1, but then you start to see that pick up and it's maybe not what you anticipated. So both of these are very quick report writer reports that I've built so that we can output that straight to Excel or review it on a financial dashboard. The company profitability trend report, again, is a standard report from ConnectWise under finance reports, and it's just breaking out that same data set but going down the page. So one client and then each of the months, so October, November are shown here, and it will just go down the sheet so that you're looking at all of the details for the service type and then what the total revenue, cost, and margin are for each of those services per month. The standard financial dashboard in ConnectWise has groupings by company. You can drill into it by date range. In this case, we are highlighting the agreement section, and then when you drill into it, we'll actually show you what's making up those numbers. So it will pull out the invoice search or summary search and be able to display details, so you can drill down very easily from here. The finance and agreement dashboard itself that I'm showing here is a custom financial dashboard. So I went into Report Writer, I pulled some custom reports and some standard reports, like the agreements expiring in 60 days. That's a standard report that you have access to in the Report Writer, so you can create your own dashboard, pull that information in, and then drill down into it. The agreement revenue trend, gross profit trend, and addition profit month to date sections are coming from a custom report that is breaking out that information and then displaying it up here in the dashboard. So next steps, we've gone fairly quickly through back-end configs on how to manage costs in the system, what the structure should look like, and then reports that are available to you. But if you were going to implement any of these particular areas, what I would suggest is make sure you have key high-level information. So obtaining the detailed vendor bills is going to be essential for you to know what it is you're paying for and what services you're providing to your clients. Reviewing your setup tables, so touching on that category, subcategory product section, drilling into agreement types, and then double checking your GL account mapping, making sure it's really mirroring what your income accounts look like. Review and update any agreement additions, get those current. Review your invoice templates, make sure you're outputting the information that you want, and then define your report analytics. So I'm Michelle Bornstein. I am a business analyst and I work with CFS. If you have any questions about this presentation, feel free to reach out. Send me an email. If you'd like a copy of the slide deck, that's great. Just let me know, and I'd be glad to help. Thank you.